Hi, this is PR Sundar. Welcome to pre-market report sponsored by Tax Buddy and FinBingo. Yesterday, though the global cues were not really very good, and we were actually doing very well. And in the morning, and in fact, as I told you, the government was determined. They keep giving some kind of good news. Yesterday, the auto PLI scheme, the auto stocks were all higher. But what happened sometimes in the afternoon, there was a news, the Hong Kong market falling 7%, China market falling 7%, Later I checked, there's a company called Tencent, it was down 22% yesterday. And while I was talking to my friend, he asked me, sir, Tencent is, how big is that company? I said it is as good as Infosys. And later he went to check the market cap. Then he told me, sir, Infosys market cap is 7 lakh crore. Tencent market cap is only 3 lakh crore. How can you say a Tencent is as big as Infosys? And I told him, 1 year before, this one was just opposite. 1 year before, Infosys market cap was 3 lakh crore. Tencent market cap was 7 lakh crore. So in the last 1 year, Tencent has fallen more than 50%, and the market cap has come down from 7 lakh crore to 3 lakh crore, and Infosys shot up more than 100%. So market cap has gone from 3 lakh crore to 7 lakh crore. So now you can see where is the pain point. And I think technology stock route, or we can say it was clearly at a capitulation period. Even the companies like Netflix can fall 50%. And yesterday I was just checking the chart. The Hong Kong market, the Hang Seng index, has given zero return in last 20 years. Anybody entered into Hong Kong index 20 years before, now sitting with zero return. And like at some point of time, I've seen UK index giving zero return in last 20 years. China index giving zero return for 20 years. Hong Kong index is giving zero return for 20 years. A stock market is like that only. Like always people say, no, you buy only for long term, only for long term. That may not be the case. Luckily, India has been doing very well, and Indian stock markets have been delivering a positive return compared to fixed return or debt return or FD return, we can say. And yesterday night, the US markets were higher, and my friend called me, so we are discussing, and I told my friend, today US markets are likely to continue their momentum upside. And then he said, sir, how can you say like that? You just look at the day before, Dow opened 300 point higher, but at the end of the day, selling came, and it closed just 1 point plus only. Many times to argue with me, people quote my own quotations. And he said, sir, you only told me amateurs open the market, professionals close the market. So last few days, though markets opened higher, towards the end of the day, it was sold off. Then I replied him by saying that, and just look, I've been observing the US markets for the last many days, and every time Nasdaq had been underperforming. And even when the Dow was 300 point higher, Nasdaq was just 10-20 point only higher, or it was, in fact, it was in negative also. So that's why when the Dow closed at 1 point plus, Nasdaq closed 250 point minus. So first time after so many days, yesterday night, I've seen Nasdaq was outperforming the Dow. So that is an indication, the people are, fed up with selling, and some people finding good value in the beaten down stocks, and they are the long-term contra investors, and they are coming and investing. So the markets turns around. So that is what exactly happened when I woke up today morning. Nasdaq was even higher than where it was trading yesterday night. And more importantly, as an options trader, I do give more importance to volatility index rather than the price. And yesterday, the US VIX has closed below 30 after a very, very long time. It has been trading in the range of 30 to 38. And I always say above 30 is always a dangerous zone. So at least, that very, very dangerous zone is out. But again, we cannot say, it can come down below 30, then again tomorrow it can go above 30. So that possibility is there. So that is why, we want to reinitiate our trade only if the VIX falls below 25. Once VIX falls below 25, then it may go to 26, 27, but it may not go above 30. Above 30 is the dangerous zone. So after a very long time, US VIX has come down below 30. That's a positive sign. But still, I will be waiting for the US VIX to come below 25. But that cannot come so easily because, US Fed event is there today. In fact, yesterday there was some inflation data which was favorable. That was one of the reasons that has triggered the short covering also. So we have to wait and see tonight what the Fed is going to talk. And it's almost certain that Fed is going to increase interest rate by 0.25%. But the comment, is it going to be hawkish or dovish? So that matters a lot today. So Asian markets are higher and SGX Nifty is indicating opening above yesterday's high. This is, really killing option sellers. And yesterday when the market was crashing, people would have sold a lot of call options. Now this gap up, such a big, usually when the markets are highly volatile and there may be a big gap down, but usually there won't be any big gap up. But today it is unusual because, I think the technology stocks fall 20% to 30% fall in just last 2 trading sessions in Hong Kong and China. I was told even in India also the mid-cap IT index fell 4-5% yesterday. I don't track that index. So I think the capitulation period is over for technology stocks in Hong Kong and China. I think that's why the Hong Kong market is also higher by about 2.5-3% now. So because of this sudden turnaround, SGX Nifty indicating very high level, and probably, TCS, Infosys, all the IT stocks will come into focus. If you see yesterday, the whole of morning trade, Bank Nifty was hugely outperforming and Nifty was almost flat, but Bank Nifty was 200-300 point higher. So assuming that the Bank Nifty also contribute about 40% to Nifty, so which means that effectively, if not for Bank Nifty, Nifty was significantly down. And that's mainly because of the fall in, I think the day before yesterday in US markets, and all the Chinese technology ADRs were down by 10-11%. So that's why yesterday the IT stocks were hugely underperforming, but which I did not notice yesterday morning. So SGX Nifty is indicating very, very high opening, and like today we can see a good rally in IT stocks because globally IT stocks are moving, and in fact Nasdaq is a IT heavy weight index. So yesterday Nasdaq was higher. I think stocks have all shot up anywhere from 3 to 9%. So another good thing is that the way markets were sold off yesterday, I thought FIA would have sold about 4,000-5,000 crore, but they just sold only about 1,250 crore. The fall was because there was no support from the domestic institutions. FIA selling was averaging about 4,000 to 5,000 crore about a week before. Now it's averaging about 1,000 to 1,500 crore only. So who knows going forward, so they may their selling may continue to go lower. At some point of time they may stop buying, or even they may start buying also. So last 2 days, though markets were moving higher and I was not happy, that's because when the market is moving higher, India VIX was also moving higher. And that's why you have seen the huge volatility yesterday. So hope that today India VIX moves down, and hopefully it moves below 25. So if India VIX moves below 25, I will restart taking my positions. But as I told you already, whether it India VIX is more or less, one can sell put options 15,700 below. But of course, because some markets are like still there are some uncertainties, better have some kind of a hedge. So what I do, I sell 15.7 put option, then buy 15.5 or 15.4 put option. So if in case if anything happens, my maximum loss is 200 or 300, but the market goes higher, you will be making some small profit only. I do strongly believe that 15,700 is the floor for our market, and not only for the immediate term, even for the until the end of December. So let us see, many times markets have proved me that I am totally wrong. So let me see this time whether market is daring enough to prove me wrong. So anyway, yesterday range was very big, and today it's opening slightly higher than yesterday's high. So we can expect market to trade with a volatility between 16,700 and 17,000. But again, 200-day moving average is somewhere near 16,980. I don't think that that will be crossing, because once a major problem came, 200-day moving average is broken, it has to consolidate below 200-day moving average at least for a month or 2 months. Then if it crosses, the rally will be powerful. Otherwise, the rally will be sold into. So in that sense, we broke the 200-day moving average only about, I think, 10-15 days before only. So it needs to consolidate for some more time around this place. So hope you enjoyed watching the video. Thank you for watching.